Hey, welcome in everybody. My name is Mike Evers and I am OrthoWorld's Senior Market Analyst. Today I'd like to share with you our orthopedic market projections for 2023. We'll start off with some general commentary about the environment during the year. We'll proceed on to some key metrics and performance indicators for the segments, and then we'll wrap it all up with our expectations for 2024. But before that, let me thank our sponsor, Triangle. Triangle is a leading contract manufacturer of high-performance, precision-machined orthopedic implants, medical devices, and instrumentation for various medical industry sectors. Privately held since 1955, Triangle occupies more than 100,000 square feet in 4 state-of-the-art facilities in northern New Jersey. Triangle partners with you from concept to market launch, utilizing their expertise in design for manufacturability and inspection to reach your goals expeditiously. Thanks again to Triangle for their support. All right, so as I said, we'll start off with some general notes about the environment in which all of the orthopedic operators were in this year, and we'll do it good news, bad news style, starting with the good news. I think just about every company I covered for third quarter earnings started their call with some commentary around GLP-1 weight loss drugs. Long story short, it's probably much ado about nothing in orthopedics. And if anything, it might be a very minor net positive. The idea is as BMI comes down, more candidates enter the surgical funnel. And potentially lower BMI would be more activity and therefore more injury and more orthopedic procedures. On the capital side, the markets were healthy. In terms of M&A, Enovis said that 2023 was more of a buyer's market than had been seen in previous years. And then Stryker and its peers noted robust demand for enabling technology and capital equipment. And then all throughout the year, really starting in late 2022, we saw elevated growth from orthopedic segments. That is expected to continue throughout 2024 as well. Now, the bad news. There are some lingering supply constraints in pockets, probably not like it had been in previous years, but it is still certainly a factor for some companies. And then Kurt Hartman, CEO of ConMed, said that there's just general noise in medtech right now. And I really like that characterization. And that's really everything from geopolitical instability, economic indicators, and then the consolidation that we're seeing in the industry, potentially bringing some uncertainty to investors and customers. And finally, we saw heavier seasonality in Q3, much more travel and vacations than some expected. And clearly, if I'm reaching this far down into the barrel for bad news, the year could not have been that bad. But still, the greater than expected seasonality caused a couple companies to walk back their guidance for the year. On balance, though, the markets are healthier than they've been in years. We clearly have some hurdles to contend with still, and maybe some things coming down the pike. But underpinning all of that, we can probably rely on elevated volumes through 2024 and into 2025 to smooth off a lot of those rough edges. All right, let's move on to market performance, and we'll dive into some of the segment performance. But just in the interest of time, I'm going to keep this high level, and I'll have some information for you if you want to dig deeper on your own in a couple slides. All right, so here's the overall market performance, and I would draw your attention over to the right side of the slide, where I'm estimating the worldwide market for orthopedics is going to reach about $59 billion, reflecting growth of 6.5%, clearly well over historical growth rates. And I often think of how Enovis has framed this, where if you look at the math, depending on the segment, but in general, if you look at the math, the industry is missing, for lack of a better term, a year or two of growth as it recovered from the pandemic. And as I said, late in 22, we saw that start to come up. And then all through 23, it elevated. across segments, but really the one I want to call attention to today is over in joint replacement. So if we chart knee and hip sales, now this is just for the big four players, but I'm sure it's very indicative of the market overall. If we chart knee and hip sales from 2016 to 2023, and then I drew a line right through 2019, you could see in the light green, it took knee sales 3 years to get back to that level. Now, hips didn't dive as deeply, and they got back to their baseline quicker. But you can see, even in hip, it wasn't until this year that we had some new meaningful growth. So this is probably where we're going to see a lot of that upside for 2024 as well. Elevated growth rates are certainly one of the main storylines of 2023. But for me, when I think of the year, I think of the really important and consequential M&A deals that went down, maybe just not in 2023, but if we take an 18-month span and put 2023 right in the middle, I think we saw a lot of really important transactions go down in that time period. So over here on the left, this is orthopedic M&A transactions by year. And you can see in 2023 so far, we've stopped the bleeding. We've grown sequentially from last year, and we have an outside chance to reach the level that we were at in 2021. Then over on the right, I took all orthopedic M&A transactions since 2016 and rank ordered them by segment. And I'm always taken aback by how much more active spine is than every other segment. And it makes sense, right? Especially at the top end of spine, it can be really hard to move the needle and get that, 3, 4, 5% growth organically. So a lot of inorganic growth coming in the spine. But I think in the last couple years, we've seen that maybe not change, but evolve to factor or weight enabling technology more heavily into that calculus. And I often think of this quote by Kevin Lobo at Stryker. Now, I'm going to paraphrase. He's talking about spine here. But in the last 4 or 5 years, enabling tech has really been one of the primary drivers of consolidation. And certainly in spine, it feels like you have to have good enabling technology to even get in the door to compete at the top levels. So I thought that was really interesting. All right, so I often take some heat when I share slides like this because invariably I don't include or mention a company about which someone has very strong feelings. So I'm going to give myself some wiggle room here and say these are some of the top growth stories since 2019. And just to level the playing field, I limited it only to public companies. And then I took the top 5 and rank ordered them by their growth rate since 2019. And I think it's a really interesting array of companies. And at the risk of being reductive, I think 4 out of the 5 have a really common focus in that they narrow down the problem set that they're trying to solve. Treace Medical, ATEC, Bone Support, Orthopediatrics are all heavily focused, laser focused on one constrained problem set, and they're able to come up with really great solutions to that problem set that you see drive them to growth at multiples of the market. Innovis, on the other hand, should probably just be a case study for how to efficiently grow an orthopedic business, starting with their proven and tested playbook for not only acquiring, but then seamlessly integrating these companies and then using that as an accelerant over their organic growth engine. I think they do that better than anybody in the industry. This time next year, they're probably at or above $1 billion in recon sales. So a super formidable company, and I think one that'll be making some really big, important moves over the next few years. Let me take a quick break here to just give a friendly reminder that all of the data that I used in today's presentation is available to you in its raw source format. Two files really are the main driver of what you're seeing here today, and they're available to you If you go to our website, in our store under information products, you can get both the files that I'll detail here in a moment. But if you're an OrthoWorld Elite member, you already have access to these files. You just have to go to the website, and under My OrthoWorld, you'll see them listed in your library. So if I may, just to shine a quick spotlight on these two files because they're so valuable to me and they save me so much time, I think they might do the same for you. So first and most importantly is our orthopedic revenue matrix. Admittedly, it's not much to look at. It is just a giant Excel table, but it has really great granular historical information from 2016 up to the current year. It has worldwide sales by segment for over 60 active companies, both public and private. And as I said, this is my main driver, what I use every day, whether it's a quarterly earnings report for a company, a presentation like this. This is what I use to create our orthopedic industry annual report. So just indispensable file for me. And then the other one I used today was our orthopedic M&A tracker, and I didn't have the heart, just another bland stack of cells. So here's our summary tab featuring a roll-up of nearly 600 orthopedic M&A transactions going all the way back to 1993. And we've assigned each one of those transactions one or more of our market segments. And then where available, we've also included the deal valuable, the multiple, and any notes that you would want to know. So if you do this kind of work, you owe it to yourself. Go grab these files. I think they'll be a big help to you. All right, let me get you out of here on this. Our expectations for 2024. I think the growth rates are going to take a little bit of a step back. Now, clearly still elevated above historical averages, but I would be surprised if they kept climbing. That noise that Kurt Hartman referenced, I think, is very much going to be in play for 2024. And then the other thing is, of course, timelines can change, but in the coming year, we're supposed to get several more robots from big players. We have Stryker's spine robot coming. We have Zimmer Biomet's shoulder robot coming. And then at long last, Globus Medical's joint replacement robot. Now, of course, these systems throughout orthopedics do not have very high usage, but if you look one or two horizons out, I think you can already see a scenario where the siloed or walled off nature of these closed systems are really going to start to put hospitals and ASC owners in a bind as they try to navigate that landscape. So that bears watching for sure. And then on M&A, I would expect about the same level of activity, maybe a little bit of an acceleration as things improve. But personally, I'm also excited to see how Globus fares with their big integration of NuVasive. I think that could change the face of the spine market for a couple years to come. So thank you for listening. Thank you so much to Triangle for their support. As always, if you have questions or comments, I'm always open to talk shop. You can reach me via email on the address here you see on the screen, or you can come find me on LinkedIn. Hope to talk to you soon.